Hello, hello, everyone. Welcome to Market Kickoff. It's going to be a pretty interesting night, I think. Overall, let's get my screen squared away here. I seem to have moved myself off to the side, but that'll be it. Um, yeah, welcome, everybody. Thanks for coming. Um, we've got a big week. So, what I want to do is look at the daily charts first and drill down. Everybody who's got questions, I know we're excited. Topstep X has got us our VIP accounts and we can start trading into the day. I don't know what the futures are saying right now. Let's peek at that, if I might. Let's see if the futures are up or down. And we will check that right here. Going to Bloomberg. All right, futures are poised to be up at this time, just a wee bit. And so we'll see what the gap ups do for us. We are near the highs of the current contract. I want you to take a look at this big move that we've had from the lows all the way back here in April. We've had a pretty good rise. Everything stayed above. This is our 30. Today we're looking at tighter moving averages, and we can see that we are sitting in a pretty solid space of new consolidation with a breakout area at 6,250. That's going to be a line in the sand. Not sure if we come back to it or not, but it is a line in the sand, and currently looking at the big chart, it is really just above where the volume point of control is on the volume profile event. Now, a lot of folks, well, a couple of them last week said to me, hey, I didn't even realize that my volume profile could give me that. And of course, it can. So when you put up your volume profile, if you want to use the setting events here, I like my row size at about 50. The bigger the row size, the smaller these bars are, and the more of them they give you. So you can see a lot of people like to put, I'll show you what it looks like as it moves up. You can see many more candlesticks coming into the fray. And, that's going to be up to you. Value area is 70. I like to use 70, and that's customary. So, and when you want to look at your style, you can look at your point of control. I like that. Remember, the point of control is where the most contracts have traded in the current environment that we are looking at. Okay? And I like to look at my developing value area, but not here so much as in other spaces. So we're going to talk about that first. When we drill down, I'm going to talk to you a little bit about what the broad market is showing on 4-hour time frames, which is what I like, right? So the big thing I want to share, size down and slow down. The market's going to be here for you all of the time, and so we'll be setting up the trades. In the early part, I'll be showing you what I like to look for. You might notice something pretty interesting, and it is all my candlesticks are the same color. Now, you might go, why are you doing that? Oftentimes, we see bearish candlesticks and they make us nervous about where price is actually going. If they're all one color, you can easily see, okay, that's trending up because I'm simply walking up to higher highs and higher lows. This is not trending up. It's moving sideways. It means inventory is accumulating. And when inventory accumulates, they're getting ready to break. Inventory accumulation tends to retest, especially if we're sitting in a range of motion. Now, last week we had Powell. He said, hey, listen, we got to talk about what's going on. It could be that we have both inflation and a weakening job market. That's going to be a really hard needle for them to thread in. But we can't really make decisions based on what it is that we hear him say. The biggest decisions that we can make should be based on where did the big money come into the market. And you can see this box on this candlestick right here on August the 1st was a bearish candlestick. Why? Because this down here is also, it's blue, and blue is down for me. And what the traders did was fight to get up over that edge. Once they fought to get up over the edge, they broke to a new high, retested that edge, and now we're moving up. So it does stand to reason that we've got bullish motion on the upside. Our 30 is up, our 13 is up. Use whichever moving averages you want. It doesn't matter. There's no golden choice for whatever. It really depends on how you like to trade. The one thing that is a little bit troubling is the slope of momentum. And as we move higher, momentum continues to drift lower. So what this tells me is all the new highs should retrace to prior areas of significant support and resistance. And that's what we're looking for. I've measured Fibonacci in the direction of the largest wave that we've had thus far. Here's the thing, it could be in the opposite direction. And so if we want to turn our Fibonacci's and make them reverse, we can simply click the reverse button here on TopstepX. And it sends us up to these bigger areas. And of course, these bigger areas are pretty big areas. And so we'll have to watch for them as they move. So let's take a look at the NQ. Make sure that we are all looking in the right space. Here's our NQ formation. Same sort of thing. Everybody bought on April the 1st. Big selling candle on August the 1st. We also had a pretty good size selling candlestick on August the 20th, but we've broken through it. And so when we break through it, momentum trending down, but trend from our moving averages going up, because trend is always master and commander, always master and commander. When the trend is upward like this, when both moving averages are upward, it will push us to the upside. So as it looks right now, pullbacks are going to be solid buy zones into the trading space today as traders try to lift on this space. The one thing that I will mention, that I mentioned in my earlier conversation before we went live, is that we could see exit liquidity up here, and that's really important. So what is this exit liquidity? It's where big money looks for price action to the upside to get out of their positions. What are we staring down? The NQ not quite as high as the ES, so there's a little bit of divergence. We are seeing a little bit of movement around in tech. NVIDIA reports this week, and that could really drive the market in a whole new space. It really all depends on how that particular bit shakes out. But trend up, momentum down, it means that our bounces are going to very likely retrace. So you want to be careful buying new highs. That's what that tells you. Let's take a look at the YM. It's really outperforming the group in terms of recent motion. And we can see that it's broken through its last near highs. We had that same bearish candlestick on August the 1st. Same sort of thing, but a very bullish candlestick on Friday. Very, very bullish. Breaking out over the space. Momentum starting to rise, but if we compare this prior high to this high right here, you can see momentum trailing down, tells us we have support tests. Now we have it moving up, but it's still lower than these prices here. Pullbacks should be buy zones. we could see some very interesting YM movements this week. This one is very interesting to me. Incredibly interesting, actually. Let's take a look at micro Bitcoin. Here is our broad motion. We have this great big move up. Same thing, right? Big candlesticks down here in April turned the whole market around. But let's look at these moving averages, right? And let's look at momentum. We can see clearly that our 30 is up and our tighter moving average, the 13, is also up-ish, but it's now started to flatten out. Here's how you look at momentum. See this high at 124,720? We've retested it on negative momentum, and that always suggests that we will come back to test new areas of support. We have a bearish candlestick formation up here on the 14th of August. If we'll remember, we had two massive liquidation events. I don't know if you read the news about that, but two massive liquidation events came in late July. I think about 13 billion in two different very large Bitcoin accounts got liquidated, and the price action came into support, bounced really big, and then 2 weeks ago we had another 750 million liquidate. So there is some liquidation going on here. Right now, it's a little sideways. So the question might be, what do I take away from this? And here is my thought. I don't like to get uber macro nerdy, but what we learn from Bitcoin, a lot of people use it as a proxy in the NQ. They can see them moving together somewhat. I don't know what the correlation actually is, but I don't know that it's really more than 0.6. I don't think that it's much higher than that. That being said, we've got a double topping formation and then a bounce up here at 117,000. Now, here's the thing. If it gets up over 118,000, it's going to try to get back to the top of this box. It is. Whether they do it or not remains to be seen. My thought is it's probably going to grind around here. I would like to see a test of 122,000 for an ideal short, but you can scalp trade this. If it bounces up and then fails to hold above 119,000, you might have yourself a pretty nice short that opens up into some lower regions in the area. And, my thought is that this thing retests much lower than 100,000. I actually believe it's going to go back into the point of control down here at about 87 to 90 potentially, but we shall see. Next one I want to look at is oil. Oil, from a daily perspective, very big bearish candlestick. I mean, monster bearish candlestick, but now it's fallen into a range. Notice the edges of this Fibonacci, that 50% range at 68.79, still looking like resistance, but there's been quite a bit of buying on the way up, and the price action is trying to lift. That being said, see the negative momentum? When moving averages are flat, momentum is going to tell you the tale. Doesn't mean it won't bounce higher, but it certainly means that at the highs, we are going to see selling pressure. And that's really important for us to learn in terms of saying, hey, what does this environment look like? It's a pretty big sloshy mess in my mind. I'm underneath my 30. I'm above my 13. They're both going in separate directions, it looks like. So the edges of the formation are going to make the best bets in general. And so my suspicion is that regions really close to 67 might give us our breakdown area. The last one I want to go to before we start digging into live action, we start watching these 5-minute candlesticks, oopsie, is gold. And gold is in a very sideways event. Tons of consolidation. It is going to break somewhere. I don't know where yet. The markets are not really giving us a big handle on that. So we can see this sideways
The market is
action.
open.
That was weird. Markets are open. Yes, they are. So we've got this big sideways action. And so my thought is deep dips, going to give you great opportunity for buy zones. Deep high spikes, great opportunities for sell zones. And in the middle of all that, there's going to be nothing but a fair bit of noise. So since we're in this chart, let's hop to the 5-minute. See if this one's opened any. I know we've got a lot of lines here, and that's because we've got congestion on our 4-hour formations. Let's see what we've got going on here. Momentum, flat. We're sitting in the middle of a trend. If you want to scalp trade this, you can see that we've got a lot of heavy congestion. Friday settlement. Thank goodness for Topstep X daily levels. Listen, I use those all the time. Daily levels are on there. What do I use on those daily levels? I look at some very simple things. Last week's high, yesterday's high, settlement, yesterday's low, and last week's low. I don't look at anything else. Just those 4-5 lines that tell me what's going on with the chart. If it makes you uncomfortable to have all of your candlesticks one color, make sure that you don't have them in one color. For tonight, what I wanted to show you is really irrespective of the candlestick's color, the framework of price action is always going to tell you what's going on. Let's take a look at the highest 30-minute candlestick of the prior day. I like to do that. We had this gigantic move. That's the biggest move of the day on Friday. And then really nothing else. We've got a support ledge for those of you that might want to trade that. 3,411 looks like a potential floor there if you're thinking about it being bullish. And rejecting settlement might be a pretty good signal that you could have yourself a short, right? Otherwise, nothing much really hanging on here for me. I can see the top of the range above 3,424. You might want to put yourself a buy stop there. That doesn't look too bad, right? For me, as a trader, I don't like messing around in this space, especially if I go to sleep afterwards, after I put the trade on. It's got a low volume node over here. That tells me, hey, listen, let it collapse through the low volume node. I've got my point of control for a couple of days, giving me that price action event. Easily, I could have myself a support buy zone somewhere around this big candlestick, right? So my thought would be a pretty solid trade opens up at 3,376. You might go, holy cow, that's really far away. Yeah, but that's where I see my greatest opportunity for risk reward. If you're going to stay up and scalp it, this region right here is where they're accumulating volume. Momentum is still in positive trading territory, but it's crossing over. And so we have to be conscious of that, realizing the traders are trying to test that resistance area. Could they buy it here? They could, but the thought process is that really it's sitting closer to, it's sitting probably closer to here, to be honest, 3409. Let's jump to the ES, and then I'll look around and see if you guys have got some good questions, or any questions. I don't care if they're good or not. They're all great. frankly, because we're engaging with each other, and learning about the markets is an active event. A lot of times we sit back, we watch somebody analyze charts, we go, yeah, that makes sense, and then we go back to our desk and we go, yeah, I don't even know. So that's the difference between passive learning and active learning. Active learning means you go in there, you mark up your charts, you see what's going on, and that gives you whatever element that you're looking for. So for us, we have a very big candlestick. That was Powell's speech, that 10 a.m. candlestick. Really, that one 10 a.m. candlestick on the 30-minute chart kept all of the price action in the same space literally for the entire day, right? The edge of the support zone, which is where the candle closed, is going to be our support action in the overnight, 6,472. If it breaks to the north, I expect that it's going to break and then collapse. So the thought might be this: if you go, oh, well, what if it breaks to the north? Couldn't I do a buy stop there? You could, but here's the problem. We've got negative momentum. We know that we had a chart that gave us all kinds of price action with, look at this volume profile, right? That is a very thin pocket. That means sellers got absolutely destroyed. They have to buy to cover all the way up. Buyers really trying to rush about getting the deal done, but no cigar, essentially, right? They really just stalled right out. We never broke the high of the 10 o'clock candlestick. That's very important, right? And if we're building momentum that's drifting down in a sideways pocket, this big move to the top could easily reject and come right down into the bottom. So this looks pretty crummy to me as price action goes. Could you take a trade and say, hey, listen, I want to go long at 64.72? You could. I mean, you could. I don't say it's out of the question, but I definitely would not do a buy stop above here, simply because there's going to be volume exhaustion to the north. There absolutely is. That's just how it looks, right? After the first volume exhaustion event, when they come back in, find support, it's going to be great. If you're a quick snap trader and you're like, hey, listen, I'm breaking through settlement, I've got all these highs here, I think this is a short, absolutely. Just know where your risk is, right? It's all about, if I engage, where do I think the price is going, and can I hold through the jockeying, right? My thought is that this price action could ultimately be a pretty dramatic fade, personally, because I mean, interest rates only go down when there's trouble. So yeah, I got a couple of things that make me a little nervous about that, right? It just does. It makes me a little nervous. All right, so let's take a look at the NQ. Who's taking any trades right now? Oh, I disagree, Bartor Fenkrop. He says trading oil without macros like driving a car without windows. Trading oil is macro sensitive, but at the end of the day, traders, big money, their goal is to buy low and sell high, or sell high and buy low. And what you're going to find is, if you stare down those formations, you're really going to find yourself great opportunities for buying and selling. And a lot of people would go, lady, you're full of crap. Listen, I might be, but I've traded oil quite a bit, and it's one of my favorite vehicles to trade. I just happen to notice that levels matter, right? They matter. And right now, we've got ourselves we've got ourselves backwardation. We've got all kinds of crazy things going on in oil right now. So it makes positioning a little bit more tenuous, but it doesn't mean that you can't find a position and just wait for it. All right, taking a look at the NQ, last 30-minute candlestick of the day on Friday is this one right here. And you can see we broke through the top of it. Now maybe we come to the bottom of it, right? That could give us a buy zone from that perspective. But again, we've got this volume pocket. Things are kind of messy to me, particularly on a 30-minute chart. So I think that we are essentially sitting in a range. Now, here's what's interesting. Here's the 10 o'clock candle. This is Powell's candlestick, right? That 10 o'clock candle when he started talking. The high got tested 3 times. And then the price action broke. And then we bounced again and made a lower high. But then we made a higher low. So what does it tell you? It tells you all of these guys are arguing all around about what price action should look like. And so for me as a trader, if I don't want to chew my fingernails to the bone or have myself a panic attack about what direction I'm going in, I really want to wait for price action to prove to me what the traders have, under the covers, right? My thought is that they give it back into this area here, that's 23,523. Then they bounce, and then they potentially fade. I would not be surprised to see this entire move be given up. I really wouldn't. I also wouldn't be surprised to see if it moved all the way up, right? The market is in a very weird pattern, to be honest. It truly is. It's in a strange pattern. All right, for the last 30 minutes of the trading day for the YM, which ends up being also the last trading day, the last 30 minutes of the trading week, that makes it particularly important. You can see we're right in the middle there. And so if we're right in the middle, chances are traders are going to try and buy up 45,673, that line right there. They're going to try to buy that up because they are collecting inventory in all of these spaces. So the question might be, all right, well, if that's a buy, where's my stop? And there is a big lump here that's about 50 ticks away, right? And so a little bit wide, you might want to use a micro for that. But every single setup is not, every single setup is not an A setup, right? Some setups are B and C setups, and I'm seeing a lot of B and C setups today because of this heavy congestion. We had a great big candle that gave us some news, and then we failed to breach the high of that candle in continuation. My thought, for the reason that happened, is because the sellers wanted to press it down and they continually got stuffed. They got shoved out of the way as they tried to sell, and the buyers said, you know what, I'll take that. I'll take that. And so that's super important. Let's go to oil. Oil's making a move. It's up here at the top of congestion. Look at this. Momentum is sideways. Trend is slightly up. So deeper dips going to give you a buy zone. This one seems the most clean to me. So where might it go to? Here's settlement. Here is very high congestion and a point of control. I would not be disinclined to put a buy right here on this edge at 63.60. I do like that. I'm leaving that one alone. I'm going to wait for price action to come into the heavy congestion, give me a higher low, test that moving average, and then shift above it, and move in the direction of trend. I like that. All right. Oh, and then we're back here again. All right, let's go to a 5 minute and let's talk about the ES. This is one of my favorite instruments, right? I do like trading the ES a lot. I think it's nice and clean. You might be going, what are these boxes, lady? Let me show you. So the way I track price is the following. I look across time and I say, show me the biggest volume events that we've got going on a 4-hour chart. Here's a 4-hour chart. The volume event, whoopsie. This volume event is here. That's the highest volume candlestick. And then the next highest one is a bullish one over here, and I've got that one marked. And then the next highest one is the one that we had yesterday, or excuse me, Friday, with the Powell news, right? And we could see this thin volume pocket here. So we know that price action is fairly mixed. I mean, it looked really downward. Listen, on Wednesday, I saw huge bearish positioning in the SPX and the SPY. I mean, huge, gigantic. And so a lot of those traders were caught flat-footed, and they had to make money on the flip side with the indices when they started running hot. So let's go to the 5 minute. Let's see what's going on. Inventory accumulation, right? It gapped up and then faded. Now it's trying to hold the area. So a lot of times traders go, all right, I don't want to trade 30 minutes because it makes me nervous about sitting in a trade. I want to get in, I want to get out. What does it look like when I do that sort of thing? And so this is one of the reasons I like to share what's going on with all the candlesticks one color. So from a big picture, we can see that we're caught in a range, right? Volume point of control, right in the center of all of this noise, the volume point of control says it's where the most contracts have been traded. And so that's what we're staring at. So the question might be, this is where we opened up, right? Coming into the volume point of control, momentum is almost at zero, right? That means there's nobody in charge. So if there's nobody in charge and momentum is almost zero and our moving averages are flat, it seems reasonable to me at this juncture to look for a short at the top of that last 5 minute candlestick, or look for long at the base of these candlesticks down here, right? My 5 minute chart doesn't tell me anything else that I can do. Now, my gut says that we rotate down easily, and my stop needs to be really tight. So what I would do is, if my limit order triggers here, because I can't, my brackets don't allow me to position before execution. So what I can do is put a stop market sell there, and it will close the trade out before anything else gets involved, right? So looking at this, that's what I would do down there and wait for it. All right, so we have way more downside coming this week. You know, I would like to say I agree with you, but I legitimately have no idea. I don't. Wow, there are all kinds of chit chat here. Hey, Hoop, thank you so much for being here. Man, you're always there. Such a great teammate. All right, let's see what some of these questions are. I think large players may need the price to go higher in to sell to that extra liquidity. You know what? I totally agree. I totally agree. You're thinking of a long in Bitcoin. All right, we'll look at that. Kelvin, I appreciate you so much. I appreciate you. All right. Okay, so somebody says they're looking for long in Bitcoin. Let's do this. Let's go to something crazy like, yeah, see, this is me. I honestly believe that this kind of motion is just going to continue. Every big bounce is going to bring new sellers in Bitcoin, right? So let's widen out and let's see where the buyers are likely to be if they show up. Now, somebody who said, I don't remember your name, but he said, hey, I'm looking for long in Bitcoin. So let's assess this. We have divergent momentum. Momentum is running up, price is running down. That's a good thing if you're looking to go long. Trend, however, is definitively down on both moving averages, down to flat on the very tight one. So what does this tell us? Something else we learned from location is this sideways pressure here that we're seeing in price and this divergent momentum that is lifting, it's still under the zero line. That being said, if you're keen on buying Bitcoin, I would say wait for the test of this region around 112,000. Now, right now, where is it? 112,000, it's almost 113,000 right now, right? So my thought would be, as it fades, you want to wait for it to get here, right? So put an alert. Maybe you have another platform that allows you to put an alert on. Tell me when the price gets there. I personally would not take a limit order here. Why? Master and Commander, trend. It's down. Momentum is rising, but momentum is only relative to where resistance is. So if you're staring that down and you're looking at this trade, to me, this trade says somebody's going to take this short into, 112,000. And then the floor might break, right? Because this big candlestick, this 4-hour candlestick on August 22nd, a very big candlestick. They close near the top. Now they're opening near the bottom. If they can't hold this chart's headed to the south. And if it heads to the south, it's got a deep fade into this inventory accumulation event. Could be all the way down to 101, right? Essentially, it could be. So, for heaven's sakes, I haven't locked any of these things, and that's driving me bananas. It's crazy, I tell you. All right. That area going to be very, very important. So, if I were a betting man, I would say that's not a good thing to do unless you're trying to scalp. So now let's look at a scalping event, right? Here's your 1 minute, right? What is going on here? To me, this looks like bounces are selling. What's my trend? Down. What's my momentum? Up. It's only telling me it's bouncing into resistance because it's still making lower lows and lower highs. I would not buy that. But that's just me. Okay? That's just me. I wouldn't do it. No, I would not. All right. Let's see what everybody else is chatting about. Kelvin, thank you, Kelvin. Short looks good on gold. Let's have a gander. Let's look at this. All right, first, let's look at the big picture. Always, when you don't know what's going on, or you even think you know what's going on, zoom out and confirm, right? It's really it's a big deal. Zoom out and confirm. Big candles here. Okay, so let's zoom in. This one, someone's coming into support, right? We've got negative momentum, sideways moving average, upward moving average on the other one. So a mean reversion would not be out of the question, right? Coming into the floor of support. And that floor of support could be at this line, which is 3,409. It could also be at this line here at 3,402. So let's collapse right in and see what's going on with the traders. Let's see what they're doing. All right. So, momentum, it's trying to lift. This, remember, when trend is down and momentum is moving up, it means the traders are trying to find areas of resistance above. Where are the best areas of resistance, you ask? Okay, well, maybe you didn't ask, but I am going to tell you. Old support is very often the best area of new resistance. Very, very often. So what are we seeing here? Right? We're seeing a fade, and then a bounce, and then a higher low. Momentum underneath the moving average, underneath the zero line. I gotta say, I don't like a long right now. So my question would be, okay, let's say you go, I gotta trade this. All right, where is your edge? Show me. So here's how I look at it. We've got inventory accumulation for the past few moments here, right? Relative trend is down. Momentum telling me I'm going into resistance, and then I'm going to move back into trend. Anything like this tells me, hey, you should have taken the short if you wanted. Old support, new resistance. That happened in the first few minutes of the evening. It just popped down, popped up, and then collapsed again. So this looks like it's got more downside action. It looks like it's going here, right? So if you were saying to yourself, hey, I really like to long down here at 34.14, the first thing you want to do, if you go, wow, I wonder if this long I'm looking at is good, collapse right into that 1 minute chart and see what the traders are doing there. If they're not doing what you want them to do to win, don't take the trade. It's a super easy way to go from your 30 or 15 minute candlestick formation and go, hey, if that's supposed to be support, let me drill down and go to the 1 minute and see if they actually are trying to defend it. And I mean, they might have for 4 minutes, and then it's off to the races, right? So the question is it a short if we come back into 34.15 or 34.14.80? It could be, but the price action's super tight, right? Look at how congested it is on the 5 minute. It's coming into a support zone here. The buyers are trying to hold it. Still can't get up over that first 5 minute candlestick that closed down here. So my thought would be, if it bounces above this area, you can trade it, but only into resistance. This kind of price action, no thanks. No thank you. I much prefer to go to price action that shows me where traders have been positioning on the hour, on the day, and then go in where they are sitting down and say, hey, listen, that's a good area. And so for me, that's heavy congestion down at the base. Let's see what the ES is doing. All right, still fading into frontline support. Okay, let's see some questions. Short looks good in your opinion. Thank you, that guy, Psycho, I appreciate you. Short looks good in my opinion. Okay, and I respect that. Just manage your risk. It's $10 a tick, and it can move like a freight train. So manage your risk, and you'll be in great shape, right? Just manage that risk, and you'll be in good shape. Coach Hoop, do you think platinum is continuing its trend from May? Let's take a look at platinum, shall we? I got a couple of really great trades out of that chart earlier in the year. So let's do it. First, let's go to the weekly, see what's going on. And I know you asked Hoop, but I am also curious myself. Whoa, look at this volume shelf that it broke out of. Holy moly. Wow. Holy cow. That's impressive. Seriously, that is seriously impressive. So, biggest weekly volume candlestick. Okay, I'm going to move that down here. So that's the biggest weekly volume candlestick. Let's size it up here. Coming back to test support. That candle closes 1222. Pretty bullish pressure, but exhausting just a little bit, right? It's got a big bearish formation. Let's take a look at the daily. Okay, that momentum's pretty divergent. However, it looks to be holding. Looks to be holding that price pressure event off of the high of that very high volume candlestick on the week. That's what we stared down just a minute ago at that 1300. The question is, what's it doing now? I think it's in consolidation, right? I mean, if we take a look at this daily chart, that is pure consolidation. Could it move above? Let's see. Let's see what that hourly chart says. It's stair-stepping. All right. Very rhythmic. Look at that. Okay. So look at how this thing stair-steps. This is super interesting, right? Definite old support recaptures as new support in this last move. Biggest volume candlestick of Friday is this candlestick here. It breached it once and then faded. Resistance. Wow, this is a good looking chart. This might have another run on it to the upside. I would like to have it on a test closer to the point of control, 1345. But it looks pretty good. Definitely in consolidation over the last several days, and it's trying to break out. Could potentially be a volume exhaustion event here because we popped above it and then collapsed with some negative volume. So I'd be interested to see what Hoop said right there. Kelvin, you're the best. What's the volume indicator you use? Which one do you mean? Over here on the right? That's called the VPVR, Volume Profile Visible Range. So it changes depending on how much time I'm looking at the chart, right? There's a lot of consolidation here in platinum. A lot. Let's see if we can set up any trades for the overnight. Come on now. This just is stalling, right? Caught in this heavy congestion. I probably want to do the same thing here and do a stop buy. Because if this accelerates out, it could be pretty nasty. But it could hold in the range until it breaks. Ideally, if this were a perfect world, here's what would happen when I left my charts. It would come in and would hit my buy zone. Then it would come in and hit my sell zone, right? And then, if it moved to the north, it would open up a market buy because the trade would be over. Or if it failed here, after I got out the first time, then it would be a sell zone and I could run it into the baseline event. So that's what I essentially think this chart's going to do tonight. It's just going to rock it here, back and forth, and then Asia is going to open up at 9. We do have Dakota coming up with slow markets, and there's always something super exciting. Also, Coach Jay and Coach Paul have said, listen, Shanghai 9 o'clock candlestick in gold is the real tell. So if you're digging gold, use that 70s vibe on you. If you're digging gold, I would say wait until that 9 o'clock candle shows up. Friday was my first red day in 2 weeks. Really ready to start the week strong. Ken, love the openness, and fantastic to go, a bunch of trading days and not have any red. That's exceptional. It means that you're controlling what you're doing, managing your risk well, and that is so very important. Hat tip to you. Friday is a dead cat bounce. My gut says, yeah, potentially. Here's the fly in the ointment. Dead cats don't have this kind of volume. And so dead cat bounces. Look at how high this volume is. This is the highest volume going up since the 16th of July. Right? That's a lot of volume. Now, what caused it? Easily, I think that these traders got themselves on the wrong side of the trade, and they had to use the futures to hedge, right? because they just did not think Powell would have such a neutral statement, right? Well, you know, a lot of people said it was dovish. I think it was basically neutral, but you know, a lot of people were thinking that he'd dig his heels in and not say anything remotely like that, but he was trying to listen to what the data say, and that, you know, that caused a really big volume spike. Now, what it could be is a volume exhaustion event, which would also bring downside pressure, right? Because notice, see this look at the size of this candlestick, right? Very big candlestick, negative pressure, the market turned right around and moved up. So when we see this kind of reflexive motion that just absolutely brings all kinds of volume with it, it usually gives us a directional shift. So you could easily be right. But, you know, hard to say, truly hard to say. You did not think he was neutral. Warning against stagflation, inability of the Fed to manage structural change. So, that's not how I meant the neutrality. I meant the neutrality in terms of we are going to lower rates or we are going to raise rates. He was very neutral there. So that's how I actually meant that. All right. Show me the names of your indicators. But of course. All right, here's the other indicator I use. Moving average. It's a regular moving average. I use a 13 and I smooth it out. I don't use the close because I don't use moving average breaks, buy at a moving average. That's just not something I use. If you do, however, I would advise that you use as your source the close. Okay? I think that's better for the trader who trades moving average crosses or movements above a moving average or below. I use an EMA for my smoothing line, and my smoothing line is 13. Now you might go, it's 30. You might go, why you got 13? Listen, it's totally random. 13, 14, 12, 8, it really doesn't matter. The question is, why do you have it up there? And what do you expect it to deliver to you in terms of information that's going to allow you to trade with an edge, right? That's the big thing. So you can use whatever your mind likes, whatever makes sense to your brain. The next thing I use is the very simple, handy dandy MACD, right? Standard entry. This is the default. Fast length 12, slow length 26, source close, signal length 9. That's what I do. You know, a few folks in the hive have said, hey, you know, what about super trend? If you remember, you can go way back to one of the first market kickoffs to look at super trend, right? And if you dig it, then that's, you know, that's cool. If you like it, if it helps you, right? I think 10 and 3 are the textbooks. So the question is, how on earth would you use something like that? So let's say we weren't sitting in this mosh pit of price action and we were staring down something and we said, hey, I want to go long down here, right? But I'm waiting for a moving average crossover. When you wait for your moving average crossover, sometimes it's going to be lagging, so you want to use a tighter time frame, right? And you don't want it to be too tight because you're going to get this kind of noise, right? So whatever your choice is, whatever moving average, nothing set in stone, there's no holy grail. It's for you to engage your mind and go, wait, what makes sense to me? And so my goal being here with you is to just say, hey, think about it. Don't put yourself in a box. You don't have to trade like somebody else. You're you. Design something for you, right? Make it couture, as they say in the fashion business. Custom made for you. And so that might be something like, I like here for me, when I'm on my tighter time frames, I will definitively use a 50 simple moving average as opposed to the 30 EMA, right? It doesn't cross that much. But if you're looking for something and you go, hey, when my MACD gets above zero on my 15-minute chart, as soon as it tracks above zero, and as soon as I get above my tight moving average, your 14, whatever, you can get in that trade. And what this super trend does is tell you if you can stay in it. So here's what it does. A lot of times we get into trades and we go, dang it, should have stayed in there, right? Super trend, if you're paying attention to it, you really only need one moving average for the super trend, and you can use your momentum. Momentum turns positive, that means you get a green histogram and upward lines. If that starts happening, take the trade above the moving average, and then this line stair steps all the way up. You might go, well, I tried that. Mine doesn't look like that. Here's what I do. I have my color, blue for the upside. It might be green one day. I change my mind all the time. But this is what I use. I use a step line with diamonds. And what the step line does, it tells me when my stop can get moved up, right? When it starts flattening out, I go, probably time to take some profit. But you can sit in there as long as it doesn't break that, you've got yourself a great trade. It's something that instead, if you used a trailing stop, this would be something that would tell you, okay, here's how you can trail up, just like that. So it's really great. If you're into it, use it. We can start talking about it some more, but I did use it in depth in some of the very old market kickoff sessions. You can look back there and see it. And, if you're into it, you can send me a note and go, hey, would you keep that up there? Help us know what's going on, blah, 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 blah. Right? But it's really to be used with a moving average and a momentum event to make an easy 3-step entry point, right? Momentum has to match what's going on with price relative to your moving average. You've got to be printing above your moving average, and then that becomes your support. Rises all the way up. It's great. Wish me luck, or rather skill. Well, I can't really wish you skill, now can I? I mean, I can hope you can develop your skill, but fantastic news that you're on your second round for an express, right? You blew the one within a week. Listen, it happens. Here's what we have to do. We get in such a rush to win that we forget that it's about how we play the game that gets us to the end. Risk management is the most underrated, underappreciated, underdeveloped tool that traders have. I'm just going to tell you. It is what it is. It's very underrated, very underdeveloped. Learning to manage risk is going to keep you out of the poorhouse. Certainly, if you start making money in these XFAs and you can pull them out in payouts, listen, that's fantastic. But at some point, you want to use your money to make money so you're not always working for your money. And a lot of us are just, working our fingers to the bone here in this space. And we simply have to learn how to allow price to tell us what's going on so price action can move with our trade that we want, and we can manage those risk events better so we're able to put more money away or to do whatever we want to with money, right? At the end of the day, the goal, please, I beg of you, don't consume, right? Be less of a consumer and be more of a saver. I know that's so boring, the old ladies talking about saving. But if you invest and you look at people who have tons of money for a long time, they don't spend extravagantly. They put their money in places where it can grow, where it can be safe, and you're killing yourself working for all of this, right? So put it somewhere it can appreciate, not where you turn around and go, where did I spend that last $2,000? I have no idea, right? Okay. Any last, yeah, totally it. Extended trip. 100%. Listen, it's the only reason I'm still sitting here today. It's the only reason. 100%. The only reason. I can't even express how important it is to go slow to get things right, right? Slow really is fast. It truly is. Slow it down so that you can really see what's going on. Manage your risk. Watch what the other big money traders are doing. How do you do that? You look at those candlesticks that carry the highest volume and you position yourself relative to those candlesticks. Look at this 10 a.m. candlestick, right? It breaks out, they never get to the top, but look at how many times they come in and test the close of that 10 o'clock candlestick and how much room to the upside it actually gave you. A lot of points, right? Big candlesticks with big volume make a difference. All right, so that's it. Thanks for all the feedback. Thanks for all the feedback. Thanks for coming. Thanks for spending time with me. Right? Go slow. Those of us in our new combines in the VIP program, don't rush it. Don't rush it. The markets are going to be there for you. Just use that OODA loop, right? Use that OODA loop. Observe, orient, decide, act. The OODA loop. Over and over and over again, you get to where you're going. So, thanks for spending the time with me. I'll see you on the streams tomorrow. And good luck with Dakota tonight. Of course, you guys, he's so great. A lot of fun stuff going to be happening for sure. All right. Thank you for coming. And some VIPs are not ready. They will be soon. They're coming. Opportunities are endless. Oh, Ken, I'm stealing that, buddy. Opportunities are endless. Capital is not. Dude. Oh, thank you, baby genius. I appreciate that. Thank you. Yeah, so watch that capital. Be careful. All right? And I'll see you all tomorrow. Take care, everybody. Bye.